you say it's always about the barrels. And in this case, it's going to take a lot to get these barrels out of the ground here. But of course, you have been talking about Venezuela for years, right? Chevron's been there for 100 years, I think the president said. What would it take for all of these companies to come back into the country? And would it be worth it for them remains the big question. Is the return there?
Yeah, I think what they're all waiting and looking for, and Chevron, which toughed it out, is hoping for, that we're going to see a stable, workable, decent regime that's going to have favorable commercial terms, good relations with the United States, and not be sanctioned. But Joe, if we could just step back for a second, because I think there's sort of three buckets of oil we're talking about.
Okay.
There's the 30 million barrels that's been produced.
Yep.
It's stored. President Trump has a lot of say about what happens to that. Yep. And they're working about marketing that. But that's easy. Then there's the oil that might be produced in the next few years. If Chevron gets a license and some diluent to do that and so forth. Let's call that the low-hanging fruit. And President Trump has a lot of say over that as well. Mainly, can he help deliver that stable government we need? True. But then there's the third bucket, and that's what I think Exxon was talking about. That's the millions of barrels a day more that Venezuela could produce. That is well beyond the Trump administration. That's going to be measured in years to 5-year increments to decades and tens of billions of dollars. So there's really three buckets of oil. I think the president's relevant for the first two, but that third one is what Exxon was speaking about, and right now it's probably not investable for that long term, and hopefully it will be soon.
We hear about heavy, sour crude. Does Exxon want this kind of oil when it's got the access that it has to other parts of the world?
It sure does.
And I don't mean to make this about companies, any of them.
No, any of them. No, look, so one question would be, look, if we were speaking here a year ago or 2 years ago, you'd say, Bob, everyone says demand's going to peak by 2030. This is like a horse and buggy factory opening up in 1902. Who wants that?
Right.
Okay. But that narrative is collapsing. The IEA and others are realizing we're going to need a lot more oil, especially in 2035. We got plenty next year, plenty this year. Not in 2035. So we need that extra oil from Venezuela. Okay. Then there's a type of oil, like you said, Joe. Not all oil is the same. Venezuela's oil is like molasses, right? It barely moves. It's got to be upgraded and treated. U.S. companies have the logistical, engineering, planning, financial wherewithal to turn that molasses into the gasoline and diesel that you and I use. And so you almost need those kind of companies to really get Venezuela back in the game. So it's just what the doctor ordered, but not till 2035.
Would our refiners need to retool to handle that kind of crude?
Not really. We built our refiners to run that kind of crude. We get the similar types, not exactly the same, from Mexico, from Canada. So our, what we call complex refineries on the Gulf, big thing, they integrate heat, catalysts, pressure. They know how to crack that gunk into gasoline.
Okay, so we've got this massive oil reserve in Venezuela. Everyone's drooling over it, or we'll just say that for now and assume that that's true. What if you made a massive investment in the Permian? What does that do to your domestic investment as an oil company?
Well, you want to have a portfolio. There's a role for Permian shale oil, which, if I can extend my analogy, it's sort of like champagne, not full of gunk, not full of, it's a high quality oil. You want to have some of that. Yeah. But the Permian has matured for the time period. It's going to flatline a little bit. We're looking into 2035, Joe, and these companies have a long outlook. They're looking well beyond the Trump administration, and they're saying when we lose 4 to 6 to 7 million barrels a day of production a year just from depletion, where are the new barrels that are going to come to offset those declines and add new oil, which we now realize we'll need? Yes. So you need light sweet from the Permian. Okay. You need heavy from Canada, Mexico, and Venezuela.
Okay, fascinating. 10 years, $100 billion. Is what they're saying. That would outlive this administration by a lot. And I think that was the point that you were getting to. Right. Does this project then go unserved? Or do these companies need to do their own exploration? How do they come to these decisions?
Well, I think, and Darren Woods spoke to this, assuming we have basic safety and security.
Yes, right.
That's important. I say to folks, other than the airlines, Joe, I don't know of an industrial sector that takes safety more seriously than oil companies. And so they're going to get technical teams in there. Imagine a mansion in a house that's been dilapidated for 25 years and no one's been inside. You want the architect or the guy to go in and take a look at the plumbing, the carpets. Has there been water damage? Right. It's the same type of thing, only on a much bigger scale. So technical teams need to get in there and look around and see. And it's not just oil things, pipelines and upgraders and submersible pumps. How about electricity? How about roads? How about port capacity? We're talking about a country, really. And this needs to be assessed because it's been in loony land for 25 years.
Really interesting. With all of that said, we're told that there are roving bands of militias. There are motorcycle gangs that are looking for American executives would be quite a great target, or American contractors. That gets back to that first bucket you talked about.
Right.
Is the administration capable of tamping down that risk?
Well, and with the State Department urging Americans to get out and be careful. Okay.
Oil companies know how to operate in dangerous places. How does this compare?
Well, so those two buckets. First of all, that oil that's stored, it's either on boats or it's in tanks on land. If they can talk to some commodity houses and arrange some transactions, they can probably arrange for that to be shipped out. It was going to go to China to pay back debt. Now it's going to go to the highest bidder with the revenue going to some treasury account. It's that second bucket. Can Chevron and Repsol achieve those promises, those goals or those targets they gave to the president on Friday? Can we get 20, 30, 40, 50% higher production in the next year or two? A bare minimum is you need safety and security. And then you need those sanctions to be eased. You need to get that diluent. We bring in liquids to cut the molasses with to make it move. You need to get more of that in. So if conditions are right, I think Secretary Wright is a great interview he gave with you guys. He's right. We could see big percentage increases off of the 240 that Exxon's doing now, 1,000 barrels a day in the next year or two if things go well. But you got to have basic safety.
Wow.